Every time I watch or read the news, there's always a group of employees going on strike, and understandably, right? They're negotiating higher pay. My
Mhm.
question is, does this at some point become a self-fulfilling prophecy? Because we know wages are sticky. So, what is going to break this cycle?
Well, likely an economic slowdown should be the thing that breaks this cycle. It's understandable in a context of labor shortages for employees to want to negotiate better wages. There's been a loss of purchasing power with the inflation over the last few years, so there's negotiation from that. But inflation is also pricing power for businesses. With inflation slowing down, that means that businesses now have less pricing power and less of an ability to give those wage hikes to employees. So we're maybe getting at the point where it's going to be harder to do give those out, and for the inflation spiral to continue to be there. So an economic slowdown is the thing that rebalances economic conditions. So likely we will still have a tailwind for inflation over the next 12 to 18 months based on all of these wage hikes that were ended out over the last few quarters. But again, going through an economic slowdown is the thing that rebalances everything. So again, 2025 is looking good as we're looking out here as a point where these factors could have subsided.
Okay. Let's switch gears, Sebastian, talk about housing in Canada. Now,
Mhm.
for a majority who've homed owns for a long time, they probably don't have a mortgage. They've built up equity. But for those who are renting and newer homes, we know they are certainly feeling the financial pressure. We
Mhm.
all love real estate, so there's a lot of focus on housing affordability. Could our
Mhm.
housing situation hurt the economy?
Well, it could hurt, of course, on the margin. We have such strong demography in Canada, and the growth of population over the last year was about 2% plus. I mean, this is way ahead of other countries in the developed world, and this is acting as a tailwind for housing and putting a floor underneath the market. So I still hear a lot of stories about in some regions we can't build it fast enough for people coming in. So there's still this issue that we think that it's exaggerated to think that the housing market in Canada could crumble at any moment. But higher interest rates means stricter rates also on mortgage payments. So if you have a variable rate, of course, you've seen the impact already. Remember that households are in majority about two-thirds of households that have a mortgage, they have fixed rate mortgages, and it's 5 years. So every year about a fifth of the households that have a fixed rate mortgage will have to renew. So according to the Bank of Canada, by the end of this year, it's only about 50% of the mortgage owners will have felt the impact of higher rates. It's going to be trickling down over the next few years, with the larger part in 2025, 2026. So we'll still see the impact of that on consumption, on behavior, on choices of households for consumption. Some households, of course, that bought at the wrong moment in early 2022 with very low rates will have some tough choices to make. But overall, we think the housing sector is sound, will resist that, but of course will have an impact on consumption patterns. So again, this is all of the delayed impacts of monetary policy at play. Less consumption, less growth, meaning economy slows down.
So speaking of interest rates, then Sebastian, is the Bank of Canada done with rate hikes? Do you think?
I would have expected them to stay in their pause this summer. So when they came out of the pause in June, our advice to them was to wait a little bit longer, because if you're data dependent, you need to have more information on how the economy is digesting all of those hikes, and especially last summer's hike, summer 2022, when
Mhm.
you had this 100 basis point hike in July, followed by a few jumbo hikes. We think maybe there was some overreaction, but it's just our opinion. They know what they're doing, and only time will tell if it was the right thing to do to hike again in June, hike again in July. Now we would recommend that they again go into a pause, they wait to assess the situation. But seeing how they reacted to data recently, I think it's still reasonable to expect the bank to move once or twice again by the end of the year. We expect that if they do, we expect that it could be seen as a mistake a few years down the road, but only time will tell.
Okay. Lots more to unfold. We'll be right back.
Yeah.